Hey everyone, doing a full market breakdown for this week. And there is a lot to look at with all the bank shenanigans and all those news going on with the financial sector and a lot of fear in the market right now. So yesterday, when we were looking at SPY and QQQ, it held very well during the morning, I mentioned. And once the fear started creeping in, the market completely rolled over. You can see that this waterfall drop over here. And when we close to the low of the day, it's very likely that it will continue in the next day. And also the fear of the banks weren't resolved yet. So will likely overnight people will the fear will creep in overnight and people will want to sell in the morning. And so essentially I was mentioning that any pop, any bounce on the morning, if we get a decent data, the bears will be shorting that for sure. And so this is what Bear did. All the bears who didn't get in yesterday FOMO'd in this morning on this bounce, and they shorted pre-market before the market even opened. And right when the market opened, a lot of bears FOMO'd in. You can see that huge waterfall drop, just straight down, just from the get-go of the morning, right when the market opened. 15 minutes into it, you're already down like 1%. And this bounce probably stopped out most of the bears. It was not expected to be this big of a bounce. But essentially, bulls were naive to change anything because they weren't even get over the high of the pre-market. You can see we topped out pretty much double top high of the pre-market, and bears took over back again. And essentially, once we broke back low of the day, you can see all this bear volume come in, and we bounced back, tested this area again, and then we dropped back down. Right now, after hours is looking decent bounce, as we're quite oversold on many time frames. So I'm currently all cash. I shorted in the morning. I took profit on it, and I stopped playing for the day because of how choppy it was today. Um, I took a short on TZA. In the morning, I mentioned to my group saying I was getting into TZA, which is a IWM short of leverage 3x ETF. So meaning if IWM drops 1%, TZA will be up 3% because it's a 3x short. So I'm going to go to the IWM chart. The reason I picked the Russell 2000 IWM to short is because of how relative weak it is. You can see this kind of waterfall drop versus SPY versus the SPY drop. See, SPY actually had a couple bounces going on, and you can see green candles in them. But when you go to IWM, it's literally like straight selling. Like there's no buyers. See no buyers in any of it. It's either shorts covering or just people selling. And so I took the short because in the financial sector, there's financial sector in the Russell 2000. So when the financial sector have relative weakness, Russell 2000 will also have relative weakness. And Russell 2000 is also a small cap ETF, which means it's a risk on ETF, meaning when there's a fear in the market, the very first thing people want to sell is their risk on assets, all their small caps. So when you want to go short, you want to short something that has relative weakness compared to other sectors like QQQ, the tech sector, would be less affected by financial sector XLF. So this is what I did. I took a short right in the morning, and once we get this waterfall drop, I exited here, and I watched this bounce, and I did not reshort it because I just decided to not play because of how choppy we were in the morning. Hindsight, I should have. I mean, hindsight, I could have said I should have just shorted, but never know, anything can happen because based on how oversold we're oversold on pretty much every time frame on IWM. So I was pretty happy with my profit and how fast I hit my target, and I just decided to go all cash. And so I'm looking for a slight bounce to cool off some indicators. Russell 2000 is oversold on the daily as well. And there's a lot of things I'm looking at on the weekly time frame as well. I'm going to go to SPY use weekly time frame. Actually, I'm going to go to the daily first. So another red flag for me on the daily is, let's clear this. As you can see, we're getting the vibes from, where's that part where we, okay, look at the weekly chart. Getting the same vibe as where we set a weekly, okay, setting a weekly higher low, and there's no follow through. So when we set a weekly higher low, it means that this low needs to be the low of the weekly uptrend, and bulls need to head higher. So the red flag was Thursday when we head higher with zero follow through. We bounced above the previous week's candle, and the bulls did nothing. Essentially, that was also where the bank's news came in as well, and all that fear creeped in. And so that gave me the same vibe as back here, this exact spot right here. So we dropped, we had a really nice bounce, bear rally bounce, and we dropped, and we needed to set the weekly higher low right at the spot. See the spot? So the bulls set a weekly higher low that week, bounced, and essentially everyone's playing off of that low. Went above it the next week, exactly like what we did, and we dropped below it. Now we're back under it. So exact same pattern that happened there in the psychology of it, where we set the low, break above it the next week, zero follow through on it from the bulls, went right straight back under it, and now we went below that low. So essentially, a lot of people got stopped out um, at that level. So like when people get in here, when the weekly higher low is set, they will set their stop loss below it. Essentially, this is what happened over here as well. And we're also below the 200-day moving average on the daily time frame. So that would be this moving average 200 right here, the yellow looking line. Let me delete that so you can see better. So yeah, we bounced off of it on Tuesday, and so we tested it over here, 200-day moving average. Bears couldn't break it down below it. We had a strong bounce, but it's about a, let's see, a 4%, roughly a 3.7% bounce on SMI. This is a huge bounce just within 3 days because the bears cannot break below 200-day moving average. Now we are well below it, and we closed a candle below it as well. So it's very notable. You can see this insane bear volume compared to the relative days volume. So right now we're still in a weekly uptrend, so you have to be careful staying in your shorts because we're technically still in a weekly uptrend. As long as the bulls hold above this prior low for the weekly trend, we're in a weekly uptrend. So next week is going to be very telling. Uh, Next week, all the bulls and bears will be battling this cluster area of the volume. So bulls is going to try really hard to hold this area, and bear is going to try really hard to break this area. So we'll see how the bulls and bears play out. And essentially, the best time to make money is on these kind of moves where you know that the bears had no follow through down here, and you get a nice bounce, a 4% bounce, and you play in between this 4%. Same thing as this drop, huge drop. This is the over 4% drop on SPY. Yeah, and then you just make money in between. So I shorted yesterday as well, and I shorted today. And now when it comes to this kind of cluster area, that's usually the hardest to play because you don't know how it's going to chop. It could go down one candle, next candle is going to go up, and then it chops you around, and you're just like you're either over trading it because it's chopping you and it's just making you very emotional. You end up over trading. You're like getting short, getting long again, and you're like, oh, it's going the other way. I'm going to go short, and you end up losing a lot of money and have no clarity of what you want to, where your target is going to be. So next week, I'm likely going to be just scalping or trading less until I see a direction of the market. If we just like slice through and then break that level, then it's a clear short. But we're already pretty oversold on a lot of the time frames. So there's a potential play of a bounce play coming in if we get a oversold stack. Oversold stacking means all the time frame is oversold at the same time. So if we get like a 4-hour oversold, hourly oversold, daily oversold, and a 5-minute oversold during that day, then that would be a really good play to get something, like a good 1% or something bounce on it, or even just a 0.5% bounce on any of the indices on the leverage TXT. I'd get a 1.5%, which is quite well. If you have like a 100K position, 1.5% could be maybe $1,500. That kind of a bounce can happen within 10-15 minutes. Could easily bounce 0.5% if we get that kind of oversold. And so yeah, I'll be watching that. If we get all time frames oversold, I'll very likely be watching a bounce play, a quick bounce scalping play. So that's all I'm looking for. We'll have to get more updates Monday morning once we get some futures chart going on Sunday night and see how the after hour plays out as well. So far, we're getting a slight bounce in after hours, and it's pretty notable because we are at this height of this area. So we're coming into testing this area already. So a bounce in after hour wasn't surprising at the end of the day as well. And see QQQ, because that QQQ is in that area as well. QQQ is holding a lot stronger than SPY. As you can see, we are far from that weekly higher low area. We can still drop 9%, and before we even test that area. And if you go to SPY, you can see we get one more red candle, we are testing that low already, 2.4%. It's because SPY is holding the XLF financial sector and QQQ is not. So let's see, let's have the difference of the chart. So if you give me this chart, I would be still playing bullish. But if you look at SPY, then you would be likely playing bearish. So right now, I'm slightly leaning towards more bearish due to this chart of the SPY. And let me delete this real quick. So yeah, so I'm looking for, we're also below the 200-day moving average for QQQ as well. So that's also a red flag. We close under it. And usually when we back test it like this, or we test it here again on 200-day moving average and bounce, we should get more follow through. But the banks really messed things up this week for bulls. And otherwise, I would say we would have tested this this prior high here if it wasn't for any of the bank shenanigans. We were setting up really well. We had a nice bounce, and we set a nice doji candle here. You can see we had a nice green candle with a bottom wick, and even with the bank's news, we had a nice bounce this morning too. And so if it wasn't for it, I would say we would have likely tested this high. But essentially, bears got lucky, and banks had those news, and we had a huge drop for 2 days. So if we get a gap down Monday, I'm likely looking for that oversold bounce all time frames. We get like a nice gap down, and we just open like down here, so not get a nice bounce. If we open flat, then is anybody's game. It's gonna be the first 30 minutes. We'll see how the action of that determine where size is gonna go. If we do gap up, then I would say bears would probably be trying to short again. But if we do gap up, then it's usually if we had a nice gap up, it means the problems for the banks are resolved. But I don't think we're gonna get a gap up with all these fears still in the market. And yeah, I'll update you guys Sunday night, and we'll see how this goes.